What's your favorite healthcare short?
Favorite healthcare short?
I don't know.
I'll tell you what mine is.
I'll tell you what mine is.
I listen to all your
fundamental
ideas.
perspective. I really like Cerner.
Yes, I was going to say
okay,
Cerner.
at least we're on the same page.
You know, he and I sit beside each other, so like, you know, I kind of like, we knew.
No, I mean, I think, look, it's really setting up to be, you know, a pretty big disaster heading into 2017 relative to X-ray. And if you think of that sine curve right there, you know, I thought about Cerner because not only we have the ACA taper effect, but you're also coming out, you know, that's like, you know, that on steroids because you know you're also coming out the other side of what was a 40 plus billion EHR stimulus program, and expectations are just way too high. So you know we've done a lot of digging and a lot of data to get to our conclusion on Cerner, but yeah, I think that has a lot of juice and back to the 50 level and probably a lot lower.
On that, just because we have a lot, and again, thank you for all of you that are new subscribers. Not all of them know what ACA taper is. Mm-hmm. Could you, and Josephine, if you could pull up slide 49, the ACA taper slide in the current macro deck, then I can walk through that just to show people the rate of change of it all. But yeah, I'll walk through the chart, Andrew, but what is ACA taper? What does that mean?
Yeah, I mean, it's basically we're comping a ridiculously difficult comp that's going to bleed out over an extended period of time. That's
being the Affordable Care Act.
Yeah, so you have an insured population growth that grows at 1 to 2% around GDP, mm-hmm. and then all of a sudden with the Affordable Care Act, you have 25 plus million newly insured hit the market all at once. Mm-hmm. That results in a very quick acceleration in the insured population to 6 to 8%.
That's the chart, actually. Josephine, show that chart while he's
which is almost unheard of, right? I mean, it's just never happened in the history of
Look
ever.
Look at that chart. Healthcare employment.
Yeah.
Look at that thing on the left.
And so that's not surprising, right? If you have a huge acceleration in the insured population, you need more people to service those, the newly insured. So healthcare employment goes up and to the right. And now we track all these metrics: job openings, admission trends, employment, PCE, et cetera. And what it's clear is that the data is deteriorating. It's slowing on the margin. Mm-hmm. So you have the healthcare universe, the XLV that's up on a rope. If you pull back a chart of like the last 10 years, it's remarkable how extended it is. And all the underlying metrics that we track with the macro factors too are just equally as extended. And we think that we're going to mean revert in a big way, right? And we're on the other side of the waterfall.
Yeah. So let's show that. I mean, so again, just take this one out for a second. We'll do again. ACA is now going to be our sine curve, the Affordable Care Act. The chart, which is on slide 49, goes like this. Okay? Go back to that chart for a second, Josephine. The chart on the left, see that? See how it goes? That's straight up, okay? So what Andrew says then, again, this is very green, very hugely green. Does that look green to you, Carl? That's pretty green. That's called a parabola. Then all of a sudden, the rate of change data starts to go like this. That, my friends, is why you're short healthcare. Right there, that little critter. That rate of change data going from, oh my God, this is so awesome, that you have to compare against. That's why Andrew said the comps equals compares. The compare against this period is unprecedented in healthcare history. Anything, almost any option, when you compare against that, you'd be short that option, or you'd be buying puts on that option. So that's why healthcare is even worse than the financials this year, which is pretty bad.
Yeah, and it's probably not going to get better anytime soon.
Exactly. And by the way, think of the things that drove the jobs market in October of last year. Oh, was healthcare part of it? Yeah. Healthcare, real estate, housing, construction, these things are all slowing now. That's why these are the best parts of the U.S. economy for the last year are now the comparison as we go into October, November, December, Hillary, Trump, probably Hillary, November, December, January. Again, November, December, January, that's the way that's going to look.
Yeah, and Emily...
That's why I have conviction, guys. This isn't like, I'm not crazy when I think about it that way. The fundamental view here is very sound and steady. And again, if you're a math person, this is a very easy thing actually to see and believe in.
Yeah, and it's always nice to have data.
Well, that's the other thing.
To support and track your view, right? Because, I mean, if healthcare, if it was going the other way, obviously we would have to address that. Right?
Exactly. So you build data trackers.
Yeah, you have models, you forecast out jolts and employment based on the historical relationships. you try to triangulate all the metrics on the consumption side of things to what you're seeing on the, the company's reporting earnings. You talk to a few hospital CEOs and you say what's going on, try to collect the anecdote here and there and see if it confirms with your thesis. They don't always do, but also, but as long as most of them do, you feel pretty good. And, it's math.
They have all these trackers and anecdotal conversations with executives whose data is currently tracking. They see their data, starts to look like this, and then it's a very valuable experience. I can assure you, Andrew Friedman sits literally right beside me out there on the desk. He sits there 16 hours a day. 16 hours a day looking at this, calling doctors, looking at it again, calling doctors, calling investors, back to the doctors, back to the trackers. 16 hours a day. What do you do for 16 hours a day? I mean, he's laughing, but it's you find it exciting.
Yeah, no, it's interesting because look, the fact is, being in my seat, right, as a healthcare analyst, and not a generalist, I can really focus. I can go really, really deep, but we also have the macro perspective that lets us capture the whole view. So if we can go like a mile wide and a mile deep too, that's even better.
Yeah,
right?
It's great.
And so it's been really helpful.